Catherine, we're going to go to you on story number 3. You actually wrote it. This is in the real deal. And let me read you the headline. I'll read you the first couple graphs, and I want you to provide some insight. You might not be able to provide an opinion, but you can provide some insight into the story. So here we go. Headline: Resi brokerages claw their way out of a slow market. Subhead: Q2 earnings show cost cutting is paying off, but challenges remain. First couple graphs. Do you hear it too? Is it the sound of optimism? Residential brokerages appear to be digging the way out of the slow market with varying degrees of success, in some case beating analysts' expectations in the second quarter. Compass, Douglas Elliman, Anywhere Real Estate, which is parent to Corcoran, Coldwell Banker, Century 21, Sotheby's International Realty, and even Zillow suggested that they have all started to turn the corner after a tough 12 months, that including slashing costs by hundreds of millions of dollars. Zillow CEO Rich Barton said the company was pleased with their accomplishments so far, despite reporting more losses for the second consecutive quarter. Catherine, we all know that real estate prices are increasingly high, although the volume has basically fallen off quite considerably. There's not a lot of supply there. I recently pulled some numbers for Q2, and we're still in a seller's market in South Florida where it's based on months of supply. 6 months is typically equilibrium. There's less than 6 months of supply out there. So how are these brokerages going to increase their revenue? And these are all publicly traded. Increase their revenue while you're not doing as much volume.
I mean, I think a lot of companies, and this has been happening for years, you could probably attest to this, they've been adding services. So even locally, brokerages are adding other lines of business to kind of make up for that. It is like a business where the margins continue to shrink. So they have to do that. I do think there's still struggles ahead, obviously, like the market is going to continue to be slow. And the second quarter is typically the most profitable, I think. So I'm curious to see kind of what happens for the rest of the year. But it was interesting because it was so bad. It's been so bad. So it was interesting to kind of see that common thread on the earnings calls, among the brokerage heads, that they think that they've kind of, the worst is in the rearview mirror. But also, at the end of the day, it's a cyclical, it's a cycle. You've been tracking it. So did we hit rock bottom? I mean, what do you think?
I'm waiting for the impact of higher insurance prices, higher property valuations, i.e. property taxes, as well as higher interest rates to really start to kick in. The Fed started raising, what was it, John, 12 months, 15 months ago, 18 months ago. It takes a while for all that stuff to sort of kick in. So it almost feels like we're just, it's really the calm before the storm, as the cliche goes, from my perspective.
It could be, yeah. I mean, price growth, though, has been slowing. So I don't think, even though they're still going up, I think that rapid pace that we were seeing is kind of gone. So I don't know. I mean, I think it's going to depend on sellers who have property owners, homeowners who are locked into 3% or lower rates. Are they going to go to the market? You know what I mean? Is life going to force them into some of these changes? Is that going to make a difference? I don't really have the answers, but that's what I'm thinking.
Let me just ask you, what's the reason that that you've heard that these brokerages are suddenly optimistic? Is it simply the time of year, or why were they seeing green shoots? Is it the fact that everybody's buying new construction because there's not enough product out there? Did anybody really say anything to you, or have you heard anything, whether it's for this story or other stories, as to why suddenly there's supposedly optimism in the marketplace as it pertains to supply?
I mean, I am hearing that buyers and sellers are starting to kind of bridge that gap, between with pricing. I think with the national brokerages that we've covered and that are publicly traded, they have cut tens of millions of dollars or hundreds of millions of dollars, in costs. So that's probably a big thing for them. But I also think they were maybe bracing for it to be worse than it was.
Good point.
And I think that's part of it.
Interesting. And as we go to Jean for story number 4, let me just tell you the best way that I say you track the economy is you look at the happy hours at a restaurant or a bar. Typically when you go in there, the happy hour will be from 3 to 6. And then as times get rough, it goes 3 to 8, then it's 3 to 10 or 3 to 9, 1 hour break. And then from 10 to close type of thing. Well, what I would tell you on the real estate side, the way you track how good the economy is doing or the brokerage is doing, simply pop into a sales office. And if they're serving you Perrier and Evian, and you have these nice little snacks from Whole Foods, you know they're doing okay. But if they're giving you a Dixie cup with water out of a 5-gallon jug, chances are they're not doing as well. So just pay attention to little things is what I would suggest based on my experience in the industry.